Quarterly results out for the Nasdaq. Earnings coming in at 69 cents a share. That is 3 cents better than the street was expecting. Revenue, $914 million for the quarter. That was also ahead of estimates. For a look at the state of technology, the IPO landscape, and more, we want to bring in Nasdaq CEO and board chair Adena Friedman. And Adena, it's great to see you. Thanks for being here.
It's great to be here.
All right, let's talk about some of these numbers, because if you were looking at the markets and the IPO markets, you know, we've heard from all the banks, there's obviously not been a lot of M&A. There's not been IPOs. There haven't been those things. But your business is diversified at this point. So you have other things that really are coming in.
Yeah, we're really pleased that we're continuing to show strong execution, even with this challenging market backdrop. I think that we had 4% overall growth in the business and 7% growth in our analyzed recurring revenues, which really reflects the diversified platform that we have today. We did have some headwinds. You know, our index business continued to show some declines because of market performance, even though we had a lot of great inflows into our funds. And we also have a challenging IPO environment, which resulted in flat revenue for our listings business. However, despite that, we had really strong growth in our anti-financial crime business, 18% growth there. And we had our first win with our first tier in a tier one client. So a $1 trillion asset bank has chosen to use our fraud solutions with our anti-financial crime business. So we're really excited about that, a great milestone for us. And then we continue to show growth across the rest of the platform with a 7% ARR growth.
That's your biggest growing business right now, the anti-financial crime?
It is. It's our fastest growing business. We are really pleased to see that we signed 42 clients in the quarter. And again, we had a tier 2 client as well as a tier 1 client come with us.
In terms of IPOs, new listings, there's not much improvement that you see if you look out for the rest of the year, is there?
Well, I think that right now we actually had 30 companies come public in the first quarter. We had a 91% win rate, so we're pretty proud of that. But you're right, you know, it is a pretty quiet environment right now. There are just under 150 companies that are looking to list on Nasdaq when the market really kind of opens up and is receptive. But I still think that investors are wanting to see a more certain economic environment. They want to understand, where do the interest rates settle out? Where does inflation settle out? And if they can see those two factors become more known, they'll be more confident in being able to predict the future, which then allows them to underwrite risk better. So, you know, maybe we'd see some, growth in activity as we get later into the year. But I think right now it continues to be quiet.
But that's the issue. I mean, if the Fed stops raising rates, that gives them certainty, even if the rates are higher for longer.
Sure.
But if a lot of people think a recession is coming, even if it's a mild one, is that a tempering factor too?
It is a tempering factor, but the markets tend to run, kind of predict the future, right? So if they can say, okay, we now know that the rates aren't going to go significantly higher than where they are. They also understand that inflation is starting to moderate, and they can kind of see that as a more predictable inflationary environment. Those are two macro factors that really factor into predicting future cash flows of a business. I mean, I think that helps them then underwrite that risk. Then they have to look at the overall economic environment. But even in more challenging environments, we do have companies go public because of the fact that investors aren't just underwriting that company for today. They're saying, what's that company going to do over the next 5 years? And they generally assume that recessions don't last forever. So companies can go public even in a muted economic environment.
Do you miss the days of the SPACs? I see it on your face. Do you miss it at all? Are they gone for good? They're never coming back.
We've always focused on operating companies coming public, but of course, having SPACs become vehicles that allow operating companies to go public that was a helpful factor in terms of bringing more companies to the market.
Do you think it was a helpful factor, by the way, in the end?
Will it be in a time capsule with NFTs?
I think that we have to recognize that SPACs became very active because of the fact we had kind of a free money environment. In an environment where money costs money, which is the environment we're in and we will be in now for probably some period of time, yeah. I think it's a very different value proposition.
Do you think those ever come back?
Well, we've had SPACs come into the market actually since 2010. So they've always been a small part of the market. Right. I think they became a big part of the market when the interest rate environment was so receptive to them.
But do you think they've been so tainted now that it's sort of...
We're still seeing SPACs come out into the market, and they still find combinations. And I think that that's a cottage industry that's existed for a long time.
Adena, let's talk a little bit about AI. Nasdaq is obviously a home to a lot of technology companies, but also you're a market that really uses technology for everything that you're doing. You see the debate on AI Where do you come down on it? And by the way, do you use AI here at the
We do, actually. So we've been working hard over the last decade, in fact, to really make sure that we modernize our technology stack, that we bring more of our technology into the cloud, that we turn our services more into SaaS services. And all of that investment we've been making, including our markets, by the way, we've been modernizing our markets to bring them into the cloud. We had our first options market go into the cloud at the end of last year. We have our second coming at the end of this year. That the fact that we have that capability and that underpinning in our infrastructure allows us to take advantage of AI. And we do use AI in our anti-financial crime solutions. It's a core part of those solutions. That is why
to figure out criminal activity.
We are looking at and
patterns.
trying to root out criminal behavior within the broader financial system, the banks, as well as in the markets. And as a result of that, I think our solutions truly are the best in the world because of the use of AI embedded in those solutions. And now we're actually starting to bring AI into the markets. We have our first AI-driven order type that is on file at the SEC, which is designed to improve fill rates and actually while minimizing market impact. So we're looking at how can we use AI in the markets to have more dynamic order types to improve the experience for investors.